Hi there, ladies and gentlemen, and welcome to Capital A Trading. And I'm excited to announce we'll be going through an advanced part of my mentorship program right here, right now. Today's lesson is going to be about market gaps. I'm going to show you what the market makers do, how they actually manipulate areas, and then how they come back to them. So if that sounds good to you, if you trade, if you take investments, if you're looking to learn, if you're looking to enhance your trading abilities, then my advice would be to hit that subscribe button in the bottom right corner, stay up to date with the channel. There's a lot of exciting content coming within the next month as my website is about to launch. Before we start, I just want to say a quick shout out to the Absolutely magazine. Thank you for all your support. Again, very cool magazine, guys. Go check it out. It's available now in all Waitrose and M&S stores. With that being said, let's get into the lesson. Welcome to what is going to be the lesson on market gaps. Again, you're just getting a little segment out of my advanced education, my mentorship program. So let's get into it. So this is how I teach my students. This is the process that we go through with each lesson. In my whole program, there's around 35 slideshows like this that we have to go through. So today, let's get into it. So what are market gaps? How to view the gaps correctly, the free candle play. I'll be taking you through a behind the scenes understanding, some examples of market gaps, and then again, some market gaps tips, and then a little task at the end to help you go away and progress it for yourself. So let's get into it. So what are market gaps? A market gap is caused by the market makers placing big positions in the market, which then forces the price to leave a massive clue in a certain area. The market makers, the financial institutions, they enter with vast amounts of money, which always leaves a footprint. It's important to understand how this is going to correlate with the buy to sell scenario, which I'll be mentioning towards the end of the lesson. Okay, so here we are. We're looking at a market gap. This is the first time we're going to see it in this video. So the first thing you need to understand is market gaps are usually created within 3 candles and it will form a hole in the market. So let me make you understand how to spot it, how to see it, how to become good at this method. So candle 1, I want you to focus on candle 1 and I want you to focus on the top of it. So right now we're just focusing on that wick, the highest point it reached, and that will be where we've got our top of the box. Then 2 shoots through the area. It creates what I'm talking about, this market gap. And then the hole is going to be judged from the bottom of 3. So 2 is the candle that made the gap. Number 1 and number 3 are now showing you how there's a hole in the market. Okay, so candle number 1 was indecision, didn't really know where it was going. Number 2 bursts away, giving no buyers a chance to become a buyer in that level. Number 3, it completes the formation, and now you can see the gap from wick to wick. So what are market gaps? Market gaps are created when the market makers burst price through an area, which of course creates a gap in the market. When a gap is formed in the market, price action is programmed to eventually find its way back to fill these gaps. Okay, so that's a massive part of what we're doing here today. This obviously creates great trading opportunities. A market gap is an area where buyers never got the chance to become a buyer, and as you'll see, sellers don't get the chance to become sellers. So the first thing we need to understand is it seems like an area where price was shot away from fast. It seems like they didn't want it there for too long. So market gaps can be viewed on any time frame. The higher the time frame, the more powerful the setup. Market gaps are usually created around an impulsive candle to the upside or the downside, which of course forms that hole. So market gaps, remember, are usually created within 3 candles, which gives you a price range for your entry. Okay, so now we're going to just start looking at the price action, seeing how these gaps form, seeing how price comes back to them, more importantly, how we can catch a trading opportunity from them. So the first thing I want to talk to you about is just this level here where we've got price shoot down and then we get our market gap. So from the top of this candle 1 to the bottom of candle 3 there's our gap. Now what you'll notice is how price just comes back towards this level. I've got a good analogy for this one. I want you to imagine you're at the club, you're buying drinks, and you just keep going back to the bar to get another drink, and then there you go. Back to the bar, you've got your drink. Again, I like my analogies. Let me know what you thought of that one. So again, that's just the gap being filled. And if you look around the picture here, you'll notice that this is where price has been just kind of trapped inside these price gaps. Now, the first thing I want you to mention is here. Price shoots up, and then we get a massive impulsive candle to the downside. Now look at how price goes back up towards this level and just fills the gap. Okay, so comes back up. The wicks are reaching up into the candle, but the bodies of the candles just couldn't go above there. So what it's doing essentially is just filling the gap, creating another transaction, and then they shoot the price down again. Now, in that movement of shooting down, you'll notice they've created another gap here from the bottom of candle 1 to the top of candle 3. We have a hole in the market. Now, again, look at how price just reacts, comes back up towards this level, shuts the gap, and then continues down. What you will then notice, of course, is another gap here. Let me show you how it works. This one here fills the gap, and then it would have went lower. So there's a trade you would have lost. Okay, so I'm just trying to make you understand that it's not all glory. Sometimes it will fail, but more often than not, it will be successful when you understand how to spot the market gap. Market gaps tips. I want you to understand that the charts are being controlled by the banks, and filling these gaps is something that their algorithm is programmed to do. Market gaps is an area in the market where you can expect price to have a reversal from. So as we just saw in that picture, price went up to these levels. It shows you where you can take a trade from. And of course, let's see if you can catch some profitable situations by understanding this method. The market gaps can also be used as targets for take profit in a trade. If you're targeting an area with a gap above, then when price reaches, you may close your trade, take partials, or whatever it may be that you was going to do. As you can see, the target would have been reached. Let's just mark out any market gaps in this area and see how price is going to react from each one. Now, what you'll notice is there's a few market gaps in the areas. There'll be some little ones, for example, here, where I can see price shot up to and then came down just by filling that little gap there. So what I want to do now is just find 2 blatant market gaps. I'm giving you around 10 to 15 seconds to think about it for yourself. Look for 2 blatant market gaps where you can see price has had an impulsive move, and you can see that no other candles really touching back on it, if that makes sense. Now, I'll bring you the answer. There we are. There's the 2 blatant market gap levels in this picture. So let's see how price will react from these areas. So remember, there's one down here, one up here. The next picture you're going to see will be this first box. So that's that first box, the first level. As you can see, price comes all the way back to the whole area and fills the gap. You can also see to the right of the picture, there was gaps created en route down towards this one. So what we've got now is an entry area to get into the market, and even better, we've got a level where if it looks like it's going to turn around, if it's going to struggle, we can exit the trade. Believe me, that's invaluable information. Okay, so now we're on the zone below. We had that first one. We're now looking at the zone below. Let's see how price is going to react with it. Now, as you can see, it shot down there. This is a daily time frame. Price shot down there, and on that day, instantly shot up. I believe that was around a 200 pip range, just that wick. From that level, understanding what the market makers are doing with these levels. So just noticing now how price comes towards these holes in the market and has a reversal in the zones. The best trade here would have been the one with that target, as you can see. It leaves the hole in the market and gives us the biggest range and the biggest movement that I can see in this picture. So again, we've got the market gap. We've got an area down here where that would have been a take profit 1 area. Again, this would have been a bonus if it came down to here. But if you just look around, you can see how price is reacting off these levels, creating a good trading opportunity, and then of course, turning the market round, giving you some space to catch some profits. Be aware of the market gaps. Be aware of how price is reacting with them. You will start to catch on to some very, very profitable situations. So Ken, the more you understand the market gaps and its cause, then the more relaxed your trading will become as well. This sell opportunity had many reasons to enter the trade. And of course, like I just mentioned, showed you where it might be wise to exit the trade with another market gap. Okay, so now we're going to dive deeper behind the scenes and just take a look at how these people in power, how the rich people really sort of interact with the market as well. So the first thing I want to show you is there's a piece of imbalance created here on the US 30 weekly time frame right here, which happened late 2016, early November 2016. So if you check back, that was when Donald Trump was announced as president. So right here, Donald Trump was announced as president this week. Price shot down. it shoots up. It creates that little hole that we're talking about, the gap. So for many years, it just shoots up. The big investors, the rich people have put their money together and it's growing together. We get a few pullbacks, we get a few dips. Now, as you can see, we're now approaching 2019. We're coming up to 2020. I'm just bringing the price slowly over. And what you'll notice is COVID is about to strike. The rich people were not sure and they pulled their money out of this market. Now, the interesting thing is where price shoots back to the level where Donald Trump got into power. It hits this level perfectly around the 1800 mark. And all it's ever done since is rise up to new heights, new levels. I believe Joe Biden has some influence on this now. And price is just rising up, showing you that how these market gaps work, what the big investors do, the rich people at times of uncertainty. And of course, I believe Donald Trump would have placed a peg here. So that's something that makes sure price doesn't go lower then. And then, of course, they've just continued with another bit of investing, putting all their money back in this area, and it just grows together again. It's not hard to notice these areas. And again, once you understand where they've marked out, where the transactions that they've placed, you can start to catch on to these opportunities as well. So again, just keep an eye on this one. Look at how it's progressed. You're telling me the rich people are not investing in this? This was a trade I caught. This is why it's here. So again, the first thing I want to show you is, can you see the gap left in the movement up here? Okay, so as you can see, price has been moving up. The next candle shuts that area. This one moves up. Okay, right. So here we have our gap. Something has been left here by the market makers, the big financial institutions, and they're going to come back and manipulate the area with a transaction. So let's just look at how this entry area has been formed. And then I'm going to show you how they hide these transactions, and then a little sort of interaction with a buy to sell to show you how to enter on a smaller time frame. So here they are. For days, price goes away, creates a nice equal high here, which is going to have lots of liquidity swimming in this area, which lets me know that that target will want to be hit. It comes back towards our market gap, and then we start to get the perfect entry. And then, as you can see, a monstrous move to the upside. I believe it was around 400 pips. A very good trade on the pound USD. You can check out how that played out for yourself. Now, the next thing I want to show you, the last thing, is just how they hide these transactions inside these market gaps. So this scenario caused a huge obvious gap on the 4-hour time frame. Inside these huge market gaps like this, it will be hard to pinpoint a trade due to the wide range. I want to see a buy to sell scenario where I can enter on a lower time frame. So watch how they try to hide this. So inside that gap, I believe something has happened where price is going to eventually return to and create another trading opportunity. So that was the 4-hour. On a 2-hour time frame, and price was clearly being dominated by bearish price action throughout this area. So what I'm looking for is a sign of price being bought up very briefly, then continuing down. As you can see, price was still being dominated by the bears on the 2-hour time frame. On the 1-hour now, and still no sign of the possible scenario inside this market gap. You must be able to refine down through the time frames, understanding where these transactions are. If I then move to the 30-minute time frame, there we find this lonesome blue candle. It looks out of place. It looks weird, doesn't it? This is where the market makers have manipulated price inside the market gap. So what we're going to look for now is just seeing how price is going to return to this level. Eventually, I believe it will. And then seeing how we can get a good sell opportunity by understanding what the market makers have done. So as you can see, this created the perfect sell entry just by understanding what happens to the price action inside these market gaps. Look at how price reached up towards the area, just slapped into it, then had a reaction. It lets me know that there's something here that holds weight. It's going to hold value. Price then walks back up to the level, creates that perfect sell entry, and we just get a monstrous move to the downside. So we've had price hit that level. We've had price hit here, create a new transaction, and move away. So what we now know is that the market makers are going to do it again to create another entry opportunity for themselves. So even look at how price shoots out of this level. There's no market gap being created. Filled the hole, filled it, filled it, filled it. And then all of a sudden, we get the impulsive candle to the downside. It's now created that same thing, the same market gap. And look at how price just comes back, crushes the gap, and continues going down. A very powerful method in trading when you fully understand what you're looking at. Okay, so let's finish with a task on market gaps. This is for you to improve your trading, to go away and work on it yourself. Mark out 3 different market gap areas and gain an understanding of how price likes to interact with these areas. I want the 3 areas you mark out to be levels where price returned and reversed at the gap, so you can gain an understanding of just how it works, how it's going to react on these levels. It's important to view the market gaps areas on a higher time frame and be able to refine it down so you can understand where the market makers have manipulated the market. That was market gaps. Hope you enjoyed it. Okay guys, so thanks for watching. That was market gaps. Let me tell you, it's a very powerful method in the markets when you understand how it works. So if you want to build up your understanding, if you want to enhance your trading ability, if you want to be able to read that chart like I do, then reach out to me at capitalatrading@hotmail.com. Again, you can have a quick look at these pictures here. This is what I offer to you. This is what's available if you want to learn, if you want to progress. It is a commitment, but with, like I say, 3 to 4 hours a week, you'll be able to enhance your abilities and build on it within about 3 months. So if that sounds good to you, if you trade, first thing I'd ask you to do is hit that subscribe button in the bottom right corner. Stay up to date with the channel. There's some exciting content coming within the next month. I have my website about to launch and the beginner's guide coming out early August. Be sure to check out for that. And again, be sure to look out for the next video coming in this advanced education section. I've been Capital A. Have a great week.
Bye, have a great time.